Welcome everyone to the Kendall Report. It is Thursday, and just a quick reminder, I want you to know that there will not be another video until next Thursday. I possibly will try to post something over the weekend, but I'm just telling you right now, I wouldn't count on that. Definitely count on seeing me next Thursday. So basically, I got a lot of things wrong yesterday. And what did I get wrong? I thought maybe we were going to get a miss on the continuing claims or something like that that would be negative. And instead, what we got was this monster ADP report, 497. I was saying that maybe everybody thinks we're going to keep beating these numbers, that's what's going to happen. Well, it happened. It's just ADP, does not mean anything for the employment numbers. We'll go through here in just a minute. But the reality is markets got hit pretty good. It's funny, I think on Twitter somebody said something about a collapse. No one said anything about a collapse, but we did see, I saw somebody commenting, and trust me, we've all been on buying our S1, buy S2, and this thing just keeps going down. And sometimes these support numbers don't make any sense. They just blow through, especially, and I just want to caution you, so if you are using the indicators and you're looking at those numbers, anytime there's like this major news out, be really cautious. Keep close stops on that stuff, because they can really get out of hand when you just get the algos just piling in, just selling and selling, wave after wave of selling, and they can push this thing down like they did today. So we did see that kind of action. So just know that you always want to be cautious around those numbers. And myself, anybody that's used those numbers, I've used them since the 1990s. That's a long time. There's been plenty of those events where you get into those. But the one rule of thumb is be careful when there's big news out there and all that. So I just want to put that out there. So yeah, hopefully you got out of that trade okay. I see we did get an STX buy signal, which is we closed below the extreme. Barely. We bounced back pretty hard out of that sell-off today. I'll show you some things on the hourly chart that is fairly significant from that standpoint. But yeah, man, a big trade down. I put on Twitter, it looks like good news is bad news. So we're still into that mode of where now they're pricing not very much, but people are starting talking about the September Fed meeting that we're going to get another increase. And it's probably going to be September. It's going to be one of the meetings in the end of the year. I suspect we will see an increase this coming month. If you think about it, all the central banks already did that, except for the Fed. They're the only ones that did a skip. So I'm fully expecting that in the July meeting, I think it's 26th, 27th, that they will definitely be raising rates again. And like I've been saying, and I continue this argument that I want to discuss with you a little bit. Since this is the last video, I'm probably going to rant on just a little bit to give you some more context. But, you know, I've been arguing that what we're seeing here is a normalization of interest rates, which means, let me define that. It means that what we're really looking at is that the market is going to set the ultimate rate. And right now, the Fed is still using that front end as a tool to raise rates to get them to normalize. I still think, I just talked about yesterday, and I was talking about on the 10-year, the 402 level, 401. And, you know, as soon as I talk about these numbers, I mention these fib targets, all of a sudden we start to move in that direction. So there's certainly a lot to go on there. Yesterday was pretty ugly. All 11 sectors down. S&P down 0.79, NASDAQ down 0.82, and then the Russell got hammered for 1.64, and that's because the bank stocks are way under pressure again. Anything that's weak or has been weak, traders are going to pile onto these trades. There's just no doubt about it. So we're definitely seeing that. So let's talk a little bit about some of the reports that came out today. ADP, as I mentioned, 497K. I think the number was 256 I'm going off memory at the moment. Let me see here if I can bring that up. But yeah, I think it was around 256 from that standpoint. And so we come, as we look at also the JOLTS came in at 9.85, so there's still a lot of jobs around. And then the ISM non-manufacturing came in at 53.9. It was expected 51.1, so that was a better number as well. And so we just can't seem to escape Bidenomics, right? That's the new term out there. Let's look forward just for a second, then I'll come back to some of these other narratives that I want to put out there. But employment tomorrow, expecting 220K, probably going to beat it. I hate to say that. I was talking yesterday that maybe there's a surprise where it comes in lower. That could still happen, but it's anybody's guess now, I think, how things are going to come. Typically, the ADP numbers aren't correlated very well, but the last 3 or 4 have been amazingly coordinated from the standpoint, correlated from the standpoint of how they've come out. That's how the employment numbers have come out. So I wouldn't be surprised to see a beat on this thing as well for tomorrow. So employment numbers expected to downtick to 3.6 from 3.7, and you can count on the White House pounding on their chest as they go through tomorrow. If these numbers come in good, they're not going to let that one slide. And so let's just talk, going back to the normalization, going back to the interest rate scenario, just for a couple minutes here, is, well, I'm still expecting to see, it's interesting because I was on a space, I can't stay on there very long, a Twitter space that happens every morning, 5 a.m. my time. And I listen to these guys, and it's not very good, but everybody still has the same dialogue. And because most of the people on here, no offense to you younger folks, and younger, I mean folks that have been around the markets for 20 years, like I've been here for 20 years. I keep telling you that's not long enough. What you really need is a little bit more experience than that. And that what I'm saying here is that folks think the Fed's just going to jack this up, the economy's going to flatten out, they're going to start lowering immediately. There may be some adjustments, but they're going to be market adjustments as we go forward. And I think this is the narrative that 2 years from now, if you spin the clock forward, that's what you're going to see. You're going to see that continued high rates, different type of structure. And I've been arguing that the entire financial market is getting restructured. So some folks are looking at the UK and talking about all the mortgages that have to be refinanced. Okay. Remember for the last, what year is this? 2023, last 10 years plus, how many corporations were going to have to refinance their debt, and all these scenarios that come around this stuff. And it never plays out, right? People figure it out. They pay a little bit more, they get the money. There's a lot of private equity that's running around doing some of these loans. It just all works out ultimately. I don't know much about the UK, so I don't want to go there very deep because I really don't understand their structure of their markets. But the point is that all of these narratives are based upon something that there's an outcome that folks are looking at. I won't mention any names, but some people think that this is the narrative that they're playing out, that if these things happen, then they end up right in the market. So listen, we all talk our book at some level. That's just the way it works. People talk their book because that's what we do, right? So I talk my book every day, which is the Wavetech database. I go through that every night. I rattle on about it and walk it forward. And one of the things that, which you'll see in a minute, is I think we're about to start some attrition and start to see some backfilling. I've been talking about that, more details here in a few minutes. But just know these rates are not going away for a very long time, but that doesn't necessarily have to be very negative at all. And I think the scenario that's being painted around these numbers are that somehow this all equates into a disaster down the road. And like, oh, it's not going to happen right now. If you remember, that's what they said last year. It's going to happen in 2023. Well, here we are, with the NASDAQ still printing up roughly 30% and all the markets. It's been a really good year. You can't argue that it hasn't been a good year. I talked to one of our institutional clients today, and he was super excited. He's up 22% with his accounts this year. Couldn't be happier. Glad to hear that. But the point is you should be up that much if you're paying attention and doing the right things. And so those of you that are institutional clients or doing those type of things, if you're not printing some pretty decent numbers this year, you should have been. But I'd be surprised if you aren't. And the point is that these narratives that I'm talking about rates and all these things that need to be financed, and let's throw in CRE, let's throw in the commercial real estate. Well, that ought to do it. Okay, now you can really get negative. I'm not looking at the chat line, but I'm sure, somebody will start telling me how terrible CRE is. And I'm just going to tell you, all of this stuff is going to get restructured. The commercial real estate market is by far the most manipulated and most, we'll say, participated as a group. So BlackRock will trade something with the other guys, and they just trade assets around, and they'll extend loans, and they'll do all kinds of stuff. And everyone will maybe 3 years from now go, oh, everybody's back in the buildings again. No more vacancies. I'm being somewhat facetious, but the point is that none of these narratives play out for the negative. And there's always been the doomsayers around. All that stuff has always existed. Negative sells better than positive. Everybody knows that. No one wants to hear, believe it or not, that things are going to be good. Just all you got to do is go to zero hedge, right? I saw some narrative that somebody posted up zero hedge, and I just laughed to myself. Well, that's never going to happen. It was a political post, but the point is that if you want to find out what's not going to happen, go to zero hedge. Maybe you can correct me and tell me some story they got right 3 years, 10 years, whenever. But they blocked me off of Twitter, so I can't complain at them anymore. But the point is that all of these narratives continue to get pushed, but you don't see the results. Now, like I said last night, we're likely to start to see some backfilling here in the markets. I think we could see 43 handle. I'll go through the details here in a minute. It looks like things are starting to set up as expected. Maybe we'll get a little bounce for a day or so, but it's going to be volatile. So my best effort I'm going to make here, folks, is to try to get you at least set up. I'm not going to be around this coming week, so until the end of the week. So I can be able to come in and talk to you about what happened. And like I said, I may have some evening Twitter notes that I'll be able to put out. We'll see. There could be some change in scheduling as I go through this coming week, but that's yet to be seen. But anyway, so let's go ahead. Let's get into the Wavetech database. And remember, all the database numbers that I'm sharing with you are yesterday's numbers. The servers are actually running as we speak. So everything's being calculated. Those 10 million calculations are being done, and all the thousands and thousands of portfolios are being updated. So let's go ahead and just take a look at what the snapshot is. It's pretty much as I was telling you it's going to look like. I'll do some forward thinking, talking about what the weekly charts are likely to look like. So let's go from there. All right, so here we are. This is yesterday's number, 65.23. We had exactly 349 buys, 554 sells. So we had a slight negative. You'll see on these top rows here from the standpoint of what's going on here, but slightly negative here on the rotation. And my expectation as we come into after today, we'll probably see a pretty good hit on the database. So we're 65.23. I expect this will probably get down to at least 62, maybe below that. And the numbers to watch for here is around 58 to maybe 58, as low as 52 is likely target. I don't think we get next to any of these other situations, but I would suspect, and I'm going to continue to push this narrative that I pushed at you last night, that we're ultimately going to head to the 40-period moving average across the board, primarily in the S&P and the NASDAQ. But let's just talk for a minute, a little more database. So I'm going to go full screen for you here. Now, what we're going to look at is the current, just give me a minute to change these around. The current value on the intermediate is 67.14. Now, we could start to top out here, see some minor attrition. I expect them pretty much in the next couple of weeks, we're not going to get below 62%. I don't see a big hit coming here. Today's action, not really that big a deal. I mean, we're still printing 44 handles, so it's not like there was a collapse and everything changed. Nothing really changed other than we're seeing some profit taking and some rotation that's happening here. And that's what we're likely to see as we come into the weekly. And my expectations going forward, last week we had about 1,100 buys and only 180 sells. I think we'll see probably a more even rotation, probably a slight negative, but I'm not sure that's the case because, like I said, if we stay above 4,400, we really aren't changing much. I'll reference that number here in a minute when we get into the charts on the S&P. At least look at last week's close versus where we are right now. And so the patterns that are likely to set up going forward in the database is some slight pullback on the intermediate, flat to down. The daily should start to come down quite a bit, at least maybe 10, 15%, somewhere 58, 52. I don't think we get into a 40 handle, but we'll just wait and see what we get. And we have, it's still, 20 days out before the Fed, so there's plenty of work to be done, plenty of things to start to look at. And I believe the same week that the Fed is coming out is also when the earnings really kick in to a big gear. So I expect that to happen and start to affect things as well. So as we get closer to that event, we'll talk about it. And so let's go ahead and take a look at the S&P. All right, as always, we start off with the hourly chart, and this thing got absolute hammered. If we came in last night, we were looking at some fib targets on the downside down to 44, 48. I actually mentioned those numbers last evening, and we did way more than print that, right? So we went all the way down to, if I get up to the numbers here, we get down to here, we get down to 42.20. I think there was a 19 print in there as a low. Maybe the next bar, yeah, 1950 was the print low on the futures, and it just straight rebound from there. And if you had the algos were suggesting that the hourly chart was going to turn around. They're now suggesting that we have a little more strength. We'll probably stay within the constraints of the 21 period moving average that's sloping down here. Is at a minus 0.34, so quite a bit of probability there. Let me just see something here real quick. I'm just trying to see if I have the probabilities. So bear with me. I will put them on here. Hopefully I can find them for. There we go. Let's put them up here so you can see right now what the probabilities are on this. And it looks like we've got about a 52% probability to stay below this 21. We do have some fib targets mixed in there as well at 44, 54, and 59. These are the green dots that are embedded in this chart where my cursor is. But the probabilities, that's fairly strong that we're going to stay below those levels. So we'll start to see depending on what happens over the next several hours, that maybe we can trade up toward the 40. But all of these are in a downtrend, so we should see some movement, I would think, sideways to up as we come into the London Open tonight. So look for that action. After that, you're going to have to update and see where things are flowing at that point in time. So let's go ahead and let's flip over to the daily. And this was what I was talking about last night, and I want you to see we got some new Fibonacci targets here coming out, and we'll leave this. We had only a 33% chance we're going to stay above the 21 right now. I'm going to click off the probability just for a second. But we got 3 fib targets on the downside: 43.72, 43.24, 42.95 extreme. But if you notice, fib target 2 and 3 are targeting this 40 period moving average. And like I said, we're rising on here, but just slightly. So I think there's a pretty good chance that we end up back toward the end of these values down over here, which is around what we printed 43.68 low, and in that lower pattern. So we may challenge that, maybe even make a slightly lower low, and then we end up with a big, probably ABC pattern. We printed a new high on the B. That's acceptable. And so we had a high here at 44.85, and then we printed the 44.98 level, and now we're coming back off here. There will be a couple points to pay attention to since I'm going to be absent here for a few days. You folks will be on your own, but we're looking at the 43.60, which is that 68 low, and then these fib targets below that. Look for the 40 to be hit, and I think we're going to see some decent downside action. I see a bunch of you bought the dip. Don't play it for a big dip. It's probably a small one. So what we had was, just counting here, we had basically a 5-bar pattern. We could get a 5.35, but my expectation is that we're getting these triple fives. So you get into a zigzag formation from an Elliott viewpoint. So we at least come back down toward this level. The positive thing that's happening here, we still have PPM1 here, you notice, at 0.16. That's enough to hold that value. So there's a reasonable amount of support at that value right now, which we're going to track right now at 40. Let me just get this number here. Yeah, so we're looking at 40. It's getting the value 44.19. So today's low, we hold there, but we get down to the next level, then we're probably moving a few days out. We're looking at 44.33, 43.33, 43.60. So I would expect to see these type of numbers come into play. I don't know that maybe that the employment numbers come out tomorrow. Maybe they crush them. All of a sudden, we're printing Fib 1, 2. We could see some pretty ugly numbers come out of this from the standpoint of market expectations, because, like I said, good news is bad news. So if we get more good news and employment comes in better, then everybody's going to equate that to the Fed's going to raise more, and the rest of that narrative from that standpoint. But this looks like a pretty decent pattern. So since I'm not going to be around, touch on the weekly, I'll spend most of my time here just focusing on the weekly. We're finally starting, and this is something I've been talking about for a couple of weeks. It looks like this next week or so, we should set up a move down to the 10-period moving average. Right now, that number is looking at, let me just get a value here, at 43.11. This goes in hand with what I was just talking about from the fib targets, all that stuff. So look for this thing to come down to the 10-period moving average, which equals the 40 on the daily. And the other thing that you're likely to see over the weekend, or when we get the first print on Sunday night, is you should see the weekly market grid turn down. So look at the market grid. A couple things you're going to want to note is you want to look at the market grid from the standpoint of it turning down and kind of getting some values there on a weekly. You can see right now we're having basically an inside week right now. Let's see what the high was. Let's verify that. 44.98 last week's high, 44.94 this week. So we've got an inside week. We'll see if we can expand that, what kind of numbers we get tomorrow. I do not expect that we're going to get any kind of major rally tomorrow and reversal. Anything's possible, right? Maybe employment numbers, instead of coming out at 220, they come at 110, and then everybody reverses the decisions they made today. It doesn't appear that's going to be the case, but once again, just be very, very cautious. But these weekly numbers should be the key, and you're going to have those things. Just for an update, we're hoping, I got very, very distracted today on something that came up out of nowhere that I had to deal with. So hopefully I told you guys maybe today, we're very close to releasing indicators. There's one last thing that has to be done, and we're going to put them out there. And just know, if you already bought them, if you go into this thing, it will automatically know your TradingView username. It's in our database, and it will automatically give you the deep discount that goes with the this new suite that's being released. So just know that, just as a side note. But the S&P, the key here will be the market grid turning down, and also watching what the actual value of the PPM1 does, and 2 actually. They're sitting right on the cusp of just rolling down and suggesting that we're going to see at least a 10. Like I said, I talked about it last night. I'll say it again tonight, is I'm still focused on that target of that 40-day moving average that's rising. So that value is changing every day. Don't go, hey, Bob said 43.60 and it only went to 43.80 or whatever the number. Look at that 40 as a key point. Those fib targets that I showed you a minute ago on the dailies are also something else that you need to absolutely pay attention to. On the upside, I would really, it's pretty simple. If I back up for just a second on the dailies, you're really looking at the last 2 days highs are really, really key in this pattern. So just know that everything is pointing to the downside. It is showing, by the way, so I'm glad I went back to the daily, is that the daily is showing that the PPM1 could turn up. So maybe that STX buy comes in. The STX buy suggests that we get 1 to 2 days sideways. And one of the new indicators being released is the STX buy counter. And on a daily chart, you need to have 5 STX buys without an offsetting RTX sell. So far, I don't know what the count is. Let's find out. Let's just do this, okay? So let's put the counter up there. And it's set on 5, so you're going to see nothing. But let's come up here and let's change the setting just to 1. Okay, so we should see there's the one that happened today. You can see the ones that happen. Those are so you can actually, when you get this indicator, you're going to be able to track these and see where they occur. But when you get to the 5, you'll see that the 5 came in right before the lows. I think 2 or 3 days before the lows. And let me just put it up there real quick so you can see it. I'll show you this, that it's relevant to what we're doing right now. Helps if I go the right direction. So there's not going to be anything. The last time we had one, you'll see way over here was, let me squeeze this in so you can see it. So the last time we had a 5 was on September 22nd last year. And we've been basically up. Not only did we get that 5 confirmation, and one of the guys that worked for me for a lot of years actually discovered this 5 pattern. It's pretty killer. When you get the indicators, you'll be able to, I'm not going to go through it now, but there's a lot of really good major signals here for a low. And so we're not likely to get 5 at this level. They don't come very often. Okay, so when they come, you have to pay attention. And that happened last year. And then we also, like I said, we had the database that was deep into cash last year as we came in out of the summer into August, September. We started to see some traction. Of course, October and beyond was a lot of traction, which has led us at least to this printing up toward this 4,500 level. All right, let's move on to the NASDAQ. So I'm just going to leave this up for a second here. I still have that STX counter. There was no 5 count on this from that standpoint. So we'll just take that off for now. But here's the deal, and we've been talking about this a lot. It's interesting that the 10, this is the daily NASDAQ futures. The 10 and the 21 have come very close together. Looks like there's a potential bounce for tomorrow, so maybe that buy the dip thing works out good for you guys. But this, it should be very short-lived, so it should be a trade, not a position. So know the difference. If we look at the other indicators, though, it looks like on PPM 2 and 3 that everything wants to roll over. Still convinced that we're going to see the 40-day moving average, the rising 40. So for right now, it's at 14,547, and it's going up. Let me just see what the relative change is here. It's going up about 50 handles per day. So just add 50 per day roughly to that. But it does, and it looks like that the PPMs are suggesting it's going to stay stable from that standpoint there. Yeah, I see somebody talking about double top. I've seen 2 double tops in 40 years. Don't worry yourself about those. It might be a short-term trade-off of it, but that's one of my favorite jokes, by the way. And I'm not trolling Jonathan. I'm just happened to look over at the chat. But yeah, double tops, double bottoms. Yeah, they work, but I wouldn't put a lot of weight on them. They'll convince you something bigger is happening, and they usually end up getting violated down the road. But anyway, so let's take a look real quick at the weekly. I just want to fill in all these gaps. This is still the big bull chart, right? It's still very strong here, but it does suggest over the next several weeks we should start to lose some momentum. But it looks like what's happening is if you look at this projection, I know this, I've got 50 bars in the future, which is kind of a joke. But if you look out, what it is suggesting is that this angle of attack is going to stay in place on the weekly. It's going to stay fairly stable. I just put my cursor, if you look over to the far right, I mean, just at the worst case, it's around 15, and most of that range that's in there being projected is around the 50 handle. So anywhere from 50 to a 0.85, which is super still bullish. And all we end up doing then is coming down to this 10-period moving average, which is at 145, 510, but it's rising every week. So this is still a very bullish pattern. And so all I'm talking about, keep trying to emphasize this, pull back to the 40-day, which is also roughly the 40-week here on the NASDAQ as well. All right, folks, we're going to get rolling downhill. We'll move a little faster here. As I mentioned in early commentary, I believe the Russell was down 1.64, so that's a pretty good number, but we printed down 2 around the RTX level, which is 1827 STX. I said RTX, STX, and that low 1835. So we're printing down that way. This is weekly. Flipping over to daily real quick, just so we can take a quick look at that. The daily is just getting zigzag. This is pretty trendless. I talked about this last night. It looks like we got 3 fib targets. We probably satisfied fib target 2 yesterday. Maybe a little rebound. Maybe get sandwiched between the right here of the 40-day. Actually, it's the 200-day has come back into play here, and getting sandwiched between maybe the 21 and 10 puts us roughly 1879, 1818, 1879 kind of range here. So nothing really exciting there. I think this, if I zoom out on this pattern a little bit, what you're going to see is just this giant consolidation sideways pattern from that standpoint. So nothing really to see here on this other than this is more of the same. And it does look like I said, that markets are just going to stay stable, drift down toward this 40. We should see the database actually click back on the short-term database, 52, maybe 48 extreme, and then the intermediate database, just a slight back up, and then we should see consolidation. I'm not really expecting necessarily that the month of July is going to be this big, robust month. Maybe as we come into toward the end, maybe early August, then maybe we'll see something from that standpoint that might be interesting to look at. But we're going to have some work to do up here, I believe. I don't think we're off to the races, and I think the downside is somewhat muted here at the moment, especially with that Fed meeting hanging out in the end of July. So there's a lot of stuff that the markets are, I don't believe market participants are going to want to make a lot of big moves ahead of that. All right, this is fun stuff. We're at the 10-year. 10-year is just going a little crazy. We did get up to 408, the close 404. Those fib numbers that were up here have kind of stopped calculating. I'm going to go over to the weekly in a minute. But you look at the angle of attack here on the moving averages. We have PPM1 is up at 0.83. That's crazy bullish. So worst case, no matter what happens, we're going to hold this SMA 10 is going to hold in place. So you're going to stay above that. That right now is way down 386. So that's not even relative at the moment. But in the next few days, that number will be back at 390, 392, 394. That's where maybe we get a little reaction back under 4%. But let's go over to the weekly real quick. So this was a number. I kind of went through this scenario last night that I was talking about. I have to mention these crazy Fibonacci targets because more than not, they come into realization. And this exactly, we got an island projection here. We had a 1-bar projection to the downside, but look at these upward numbers. Fib target 1, 401. We've exceeded that. I talked about that multiple times over the last several weeks. And then we had 429, 447. So it still looks to me that we have a week, maybe 2, where we're going to see these things start to peak out, come back into these averages. So somewhere, and this is a random number, so don't troll me too hard, but we're really looking somewhere under 430, probably staying above 4% now. And any print we see down to 390, then expect to see some reversal there. So if you're trading the futures on these things, then that's where you're going to be looking to short again once you get down that level. I think the long side will be possible on these things, but just know those are the kind of the extreme ranges. And right now, the trends are up. And we're seeing the acceleration. If you look at PPM2, way over in the far right, 0.38. PPM3 right now is 0.15, which is in an uptrend, but not a confirmed trend, but 0.38. And then we've got the 0.38 on PPM2. On PPM1, it's 1 point plus 1.60. This is a huge number. So we've got parabolic. We have an extension. If you watch my intro to my video, then you'll know what that extension is. Whenever you get to around 1.5 plus, that means that the sequence that you're in is likely to extend and probably extend in toward this 420, 429 level. So this is going to just continue this pattern that we're seeing. That's what the projections are telling us, but that's what the current values are telling you. If we could go back over here, let me draw in something because this, I think, is going to be fairly important to understand as we go through the next week here. So let's draw this in. So you can see here, this is the PPM going up. This PPM, all these PPMs are rising. But if we come back, you'll see when I'll draw in this arrow right here, when we got to this point here, that was not quite the peak, but it was pretty close to it. We could have, this could be another peak value as we come in here, but that just suggests there's a little bit more into this movement before it completes itself. Okay, so these are going to be pretty important. The PPMs here on PPM 1 and 2 look like they'll stay over there first and second derivative, especially PPM 2. So that just tells you that angle of attack is real and it's going to likely to continue to rise above those levels. Let's take a quick look at the 2-year. It's even more dramatic. It seemed somewhat crazy. I'm going back here to April 17th when we were getting these fib projections at 460, 5%, 525, and then we print today at 5, we'll call it 512. And that fib target was 5%. So now we're looking at potential for 5.25 in this run. I've been talking about at least the angle of attack is starting to peak out, but there's still bullishness. This is a weekly chart we're looking at. So there's still bullishness for 4 or 5 weeks, meaning we're probably going to trade up into that next Fed meeting. So, Gil, I see your comment. I promise that it's going to be worth the wait. All right, let's go and take a look at crude oil. Been talking about this. We got a little bounce out of here, but we're still with it in this downtrend here. And this is just going to continue. Looks like maybe you'll get some stabilization here and right around this 200 week moving average weekly chart again. So it looks like the 200 week is going to have a lot of power in this trend. 200 week is maintaining, but everything's looking to turn up 4 or 5 weeks out, maybe a little bit more. So just expect to see these values stay down here. We get these crazy Fibonacci targets on the downside, and they just aren't likely to get hit. I mean, this is one of the major commodity markets on the planet, and there's just a lot of influences that are going to keep this thing from really getting to where you think you want them to be. But this like I said, we're in that phase where we have Fibonacci targets on the upside, Fibonacci targets on the downside. So which way do they go? It looks like to me that there's going to be still a downward bias. Like I said, look for the 200, stay sandwiched between the 200 and below the 40. Those numbers, 77.30, and the 200 is going to be the 67.50. These are numbers I've been talking about for a number of weeks. All right, so gold is next, and still, this is kind of boring, but we still have some downward pressure, weekly chart again, and looking to stay sandwiched between the 40-week and the 21, maybe the 10. They're kind of at the same values right now, but those numbers are around 1953 is one of the numbers, and then the 10 is 1966, so 53 to 66, major resistance support down here at right now 1877, and that number's moving up. So if we continue to go another week or so, that's going to be a number around maybe just under 1900 is going to represent a pretty decent support. And in the end, what's going to happen here, folks, is this is actually going to have to be a fairly bullish pattern, at least for a decent retracement of this decline that we've been watching since the last time Peter Schiff put out his buy signal. So we're on weekly Bitcoin. We finally saw a little bit of heat coming in. Let me go over to the daily first. Let's just get over there just to take a look. And this is what I was talking about, this pattern. Looks like we're going to challenge the 21. Algos are suggesting that we're probably coming down to the 40. It's almost exactly what the S&P and the NASDAQ looks like. We should challenge the 21 period moving average right now, which is 29,607. And then below that, you're looking at the downward range here, probably at 28. Well, I'm just rounding off 28.2. We should ultimately bottom around there and maybe set up a bullish pattern. But the algos are suggesting multiple days of at least strength, not strength, but weakness to test those values I just mentioned. I got a pretty big outside reversal bar today, which probably is significant. And if we look for that 3-day trade to unfold, and that will be something to watch for from that standpoint. But I am the whole pattern is setting up ultimately gets us down to about the 40 period moving average. You'll need some sound, though. That will do it, folks. Thank you so much. Really apologize for the disruption in the channel next week. I know we've had some of these. Sometimes it's very difficult. I do these every day, as you know. I love doing them. I've tried going back to videos that were produced. I kind of like hanging out with all of you. You know, that it's actually a lot of fun seeing some of your comments. And one of these days here, maybe in the next couple of weeks, we'll do a real live stream where we interact and maybe do stocks and do a whole bunch of stuff like the old days, like we did back in 20 and 21 when we were all locked behind the bars. And so we'll go from there. I'm just looking at one of the things I just saw a word. I don't even know if it's what you're talking about. But one of the things that's being thrown out there as another negative short term is this UPS strike that is being threatened. And that would certainly disrupt. What's interesting about the timing of that is it's right coming into Prime Day. So that would really disrupt Amazon's Prime Day if that happens. So who knows? There's always all kinds of events that are going on, and everything gets played up to be bigger than expected. Maybe FedEx and the U.S. Postal Service will pick up the slack. So who knows what happens with these things. So just know that what I'm doing is really important, and I will be back here next Thursday night, and that will be same time, same station, 6 p.m. New York time. Next Thursday will be the next time you see me. They said I may be able to post something. Wouldn't count on it. Possibly, if I can make who was it that was just commenting on something is about the indicators. Possibly, maybe on Saturday we get these out. Maybe I do a quick live stream, just the introduction. We'll see. Hit the bell, subscribe. You'll know when I do that. I'll also put something out on Twitter, and you can follow me on Twitter. I'm PortfolioXpert with no E. So it's portfolio and then just the expert, and that's it. Well, folks, I hate to say it, but I'll see you next Thursday, and have a great weekend. Good day trading tomorrow. Should have lots of activity, and hopefully I laid out some pretty good parameters for you to walk through as you go through next week. So thanks again for being part of this channel. It means a lot to me. Thank you.